Today felt like deja vu for anyone who's lived through the chaos of past market crashes, but this time, something feels different, almost orchestrated, because while the world was focused on a collapsing crypto market, with Bitcoin plunging under 77K, ETH around $1,400, and Solana dipping below $100, a far bigger game was being played across global financial markets, with Hong Kong down 13%, Taiwan down nearly 10%, Japan following close behind, and even European markets like Italy and Sweden bleeding out in synchronized panic, all pointing to what traders are now calling another Black Monday. But here's where it flips. While the bloodbath dominated headlines, behind the scenes, the real story might not be about a crash at all. It could be a controlled demolition. Because unlike 2008 or the COVID crash, where chaos hit suddenly and globally with little warning or coordination, this correction is different. It's happening with full awareness from the very people pulling the levers. And when you look at how Trump's trade war narrative is sinking with sudden tariff hikes, collapsing oil prices, and margin calls around the globe, the picture that emerges isn't random volatility. It's strategic pressure, designed to spook investors out of risk assets and funnel them back into one thing: U.S. Treasuries. And it's working. The VIX spiked above 50. Global indexes triggered circuit breakers, and capital fled emerging markets like Vietnam, Taiwan, and South Africa, seeking safety not in gold or crypto, but in the US dollar and treasury bills, which, by the way, have seen yields fall over 30% since January, effectively lowering the cost of US debt just in time for Trump's potential debt refinancing strategy. You don't need to believe in conspiracies to see what's playing out. Mass fear has pushed trillions out of global markets and straight into short-term US debt, allowing the Treasury to raise cash more cheaply, while Trump pressures the Fed to follow the bond market's lead and cut rates. He's been loud about it, posting that inflation is under control, oil is down, food prices are falling, and the Fed is too slow, laying the groundwork for rate cuts that could turbocharge the next market rally, right on time for the midterms. This isn't chaos. This is the setup. And while the markets may be red today, history shows that 7 of the best market days often land within 15 days of the worst ones, which means that this fear could flip to euphoria fast, especially if the Fed blinks, and Trump knows that. So don't get distracted by the noise, because if this is a controlled burn, then the recovery will be just as explosive, and those who positioned early could ride the biggest rebound we've seen since 2020. If you don't follow the channel, then please do.